Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 4th of February 2020, so yep, welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. I'll read a part of it and I'll let you do the rest, guys. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, as I said, a few seconds for you to read the rest and we can continue. Okay, so now then, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we update on a daily basis. So yep, guys, I believe you can find a lot of useful stuff here for yourselves, so feel free to visit us on jfdbank.com and click on the research tab right there. So now then, let's jump into the charts. Now the first one I want to touch on here is the FTSE100. Now I talked about the FTSE last week, and basically what I was saying that from the technical side, we saw a nice move here away from this medium-term upside support line taken from the low of the 3rd of October, and we saw a break of this short-term, a bit of a tentative one, steep downside resistance line taken from the high of the 24th of January. So in a way, given that we already managed to break this downside line, we're no longer going to focus on it. What we're going to focus on, it will be the this level right here that got broken, the 7,393 level. So in a way, for now, you can see that the index is comfortably trading above it. So in a way, it continues to, it seems that it wants to continue pushing further north. The only problem here, of course, are the obstacles, these resistance barriers that it's coming across. So the first main one to watch, of course, will be around the 200 EMA here on the 4-hour chart. Now, if it gets a hold up around here, this is where the bears could re-enter the game and push this one to the downside. But if it starts pushing above it, then, well, something else to consider will be the area around the 7,503 territory, or in a way, you could round it up towards just the 7,500 zone. So slightly above that, we do have another resistance area near this downside line taken from the high of the 17th of January. Now it's a bit of a tentative one because we only have 2 touches, but nevertheless we'll keep an eye on it, and we'll see if it actually gets a hold up around here or not. So long story short, basically this is the idea that we're going to be keeping an eye on, because if it gets a hold up, if the downside line keeps the price down, then, well, I mean, we could see another round of selling. For now, we'll be very careful, as long as, in a way, until it's kind of trading in between these 2 lines, because in a way it could just continue moving sideways as well until it exits one of the lines. So if we do get a nice push through this downside line, then yes, we will consider a potential move back here towards the current highest point of this year, near the 7,689 zone, or in a way you could round it up towards the 7,690 zone, or in a way, if it decides to break below this upside line, now this is where we will aim for the downside. But again, for now, guys, from the very short-term perspective, there is still a possibility for this one to drift further north. I mean, the markets are picking up today on good positive kind of news from China. Or let's say the reports are coming out that China is kind of trying to maintain the virus, and so far it's kind of okay-ish, but again, don't get me wrong, we just need another bad headline around that, and yep, this could send the markets into a free fall again. So jumping into the S&P 500, similar story here. So basically, it is trading. Well, it seems that this is where It closed below, yesterday it still closed below this downside line taken from the high of the 24th of January. But looking at the cash index right now, we can see that the price is already above this downside line and is getting closer to this barrier that I talked about previously. And to be more specific, yesterday I talked about this one, this 3,293 level, because if that gets broken, well, I mean, in a way, it could increase the chances of a potential move back to the upside here towards the all-time high near the 3,338 territory. But again, for now, let's be very careful. Like I said, currently the price is balancing near the 3,286 mark. So let's see if the bulls have enough steam to push this one further north. Basically, what we will have ourselves here is a nice opening gap to the upside. So keep your eyes on that one, guys. And look, like I said, of course, keep your eyes on the 3,293 level. If this area holds, we could see another round of selling. But to be honest, for now, what we're going to do here is ideally, maybe we would like to see a drop back below this downside line. But even better, to be honest, a drop below the 3,234 mark could do us do some help here for the sellers, and yep, further declines could be possible, especially if it drops below the low of the 31st of January, and that's roughly around, let me just quickly put this one on the chart, near the 3,215 mark. So yep, we'll keep an eye on that one, because a nice good drop below this would confirm a forthcoming lower low, and yep, more sellers could be joining in. But again, for now, guys, we are already back above this downside line, but still slightly below this key barrier, this key potential breakout barrier, after which we could consider further upside. Now, jumping into gold, of course, understandably, if the equity markets are picking up again, gold is losing its attractiveness, and this is what I was talking about this morning. Basically, from the technical side, if we get a break of this upside line and a drop below the 1563 mark, then yep, in a way it increases the chances for further drift lower. Initially we will target the 1551 territory or this 200 EMA on the 4-hour chart, but after that we'll reevaluate everything again. I'll see what he wants to do then. But again, like I said, for now everything's kind of leaning more towards the downside, so yep, we're going to remain slightly more bearish than bullish on this one, at least in the short run. And as I said, we'll reevaluate everything again if we do get a test of this 200 EMA, and if it wants to drift further south, that's wonderful, but we'll keep a close eye on the 1535 territory, because that's the low of the 13th of January, and in a way this is where a holdup could occur. And then it would be very interesting to see if actually it can travel further south. But let's not get ahead of ourselves too much. Let's see how this is going to play out in terms of the upside here. What you could do is keep an eye on the 1573 mark. But to be honest, ideally we would prefer maybe a push back above the this little high here, the 1580 territory, which if gets broken, then yep, could open the path back towards the 1594, 95 zone here, or even a little bit further to the upside. Again, for now, the upside is slightly off the table, so let's see if it can continue drifting south. AUDCHF, now looking at this technical picture here, it continues to trade below this downside resistance line. Now, a bit of a tentative one, of course, but nevertheless, we'll keep an eye on it. Now, I looked at this one quite a while ago, and previously I was talking about a breakout below the 0.6614 zone, which we got, and we saw the pair sliding heavily to the downside, but it found some support around here near the 0.6423 mark, from which it rebounded and is now making its way higher, at least trying to make its way higher. The only problem here, of course, with the upside is this downside line taken from the high of the 1st of January. Now, if it gets a hold up around here, then, well, I mean, we could see another round of selling, potentially bringing this one back down. Initially, we're not going to, if we see such a move, we're not going to initially target the lowest point here, the 0.6423. What we're going to do here is we're going to mark, we're going to aim for this intraday swing high, marked by the marked by near the 0.6482 mark zone, and of course, as you can see, this area acted as a nice area of support today as well. So that's why we're going to keep an eye on this one. And yep, for now, yep, like I said, guys, we'll see how it performs near this downside line, and if it gets a hold up here, we could see another round of selling, but only up until here initially. After that, if it wants to drift lower, then yes, we will reevaluate that again. But for now, like I said, guys, yep, we'll keep an eye on this downside line, and we'll see how it performs around here. If this downside line gets broken and the pair travels above the 0.6614 mark, then, well, I mean, this is where we could start considering a potential move a bit higher. Now, GBPCAD. Now, of course, looking at this picture here, we had a nice sell-off today. We had a nice drift lower, but let me just actually clear out the drawings here, basically. So overall, or should I say, from the shorter term perspective, we're seeing that the pair continues to drift, to trade above this short term upside support line taken from the low the 20th of January. But recently, I mean, you can see that it drifted lower today. It did overshoot it, but quickly got back above it. On the other hand, somebody might say that this is a nice head and shoulders pattern forming here, but to be honest, in order for us to consider, let's say, this is as a nice head and shoulders pattern, maybe we would like to see a drop below, at least below this level here, below the 1.7231 zone, roughly around there, because this way a drop below this level would also place the rate below this upside line, and in a way more sellers could be joining in here and driving this one to the downside. And one of the levels that we're going to be targeting will be the low of the 28th of January near the 1.71 mark. So good potential target here, but again, that we need to see a drop below this little territory right here before we could consider that move towards that 1.71 mark. In terms of the upside, now with the upside, it is also a little bit tricky here. If we get a push above today's high, we might consider a further move higher. The only thing is that, to be honest, looking at this structure right now, ideally we would prefer to see a push above the January 31st high near the 1.7481 zone, and only then aim for the upside. Now, I do understand we're missing out on a bit of a space here, but to be honest, we'd rather be safe than sorry. And if we do get a push above the 1.7481, then yep, this would confirm a forthcoming higher high, and yep, we could start aiming for the for further upside. For now, we're probably going to remain a little bit more on the neutral side, because again, we want to see how it performs near this upside line, and if it starts breaking it, then we'll keep an eye on the 1.7231 zone. If that gets broken, well, this is where it could become interesting for the sellers. USDJPY, very quickly on this. It broke the downside resistance line. This is a bit of a tentative one, but nevertheless the short-term downside resistance line taken from the high of the 20th of January, and is now trying to make its way higher. But you can see that today it's getting a hold up near the 200 EMA on the 4-hour chart. Now, just let me actually clear out this chart a little bit, because let's probably look at this one from a different perspective. So yes, we did get a break of that downside line. It's no longer valid, and for now the main question here is, can this actually push further north, and can it actually break above the 200 EMA on the 4-hour chart? If it can, what we're going to do here is we're going to keep an eye on the 109.27 zone, which is marked by the high of the 29th of January. And if we do get a push above this, now this is where we'll start aiming for some higher levels. Initially, we'll target this little high of the 24th of January near the 109.65 zone, and if that fails to withhold, then yes, a further move higher could be possible. For now, guys, all eyes are on this little barrier, the 109.27. If we do get a nice break above this, then yep, we will aim for higher levels, because this would also already kind of place the rate above all of its EMAs, and in a way more buyers could see this as an opportunity to drive this one further north. Of course, this will also depend on the equity markets. If those suddenly turn around south, well, we may see the yen buying increased again, and well, this could bring the rate down towards this recent low here near the 108.25 zone. And let me just adjust this very quickly. There we go. Roughly around here at the 108.25, 26. But this is going to be the barrier for us to consider, after which we could consider further declines, because this way, if we do get a drop below this 108.26, then, well, I mean, this would confirm a forthcoming lower low, and yep, more sellers could be joining in here, potentially driving this one towards the lowest point of January near the 107.63. But until then, guys, we are keeping an eye on the upside, especially with the nice reversal in the equity markets. So the yen attractiveness, it seems that it's diminishing for now, but again, like I said, there are some obstacles here. There are some resistance obstacles for this pair to overcome, that it would need to overcome first before we could consider further upside. So keep your eyes on this barrier here near the 109.27. And the last pair I wanted to quickly touch on, and that's euro dollar. So basically, looking at this picture here, you can see that the pair, it continues to drift lower today, but it's struggling with this barrier, this level that I talked about this morning near the 1.1040. We need a nice good drop below this before we could consider further declines. But again, as you can see now, the pair, it is kind of balancing just slightly above it. Again, like I said, for now, guys, we're going to remain somewhat a little bit more on the neutral side. We need to see a drop below this area before we could consider a potential move towards the 1.10 zone, the psychological 1.10, or even a little bit lower, maybe even towards this 109.80, which is the lowest point of November of last year. So for now, keep your eyes on that one. In terms of the upside, we'll stick to the same idea. We need a break of this downside line first, which is taken from the high of the 31st of December. A break of this downside line first, and then a push above the high of the 31st of January, which is around the 1.1095 zone. If we do get a push above that, then yep, there could be more chances for euro dollar to drift to the upside. Until then, the upside could be slightly off the table. We are closer to this 1.1040 territory. Let's see if it can hold. If it cannot, then, well, it could be a gateway towards the psychological 1.10 zone, or even lower. So keep your eyes on that one. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, 7 o'clock GMT time. For now, I hope you have a beautiful evening, and I'll see you later. Thank you very much, and bye-bye.